take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
What's up? Good morning, everybody. Welcome to the morning show. It's the best morning show in finance. I'm Spencer Israel. I'm here, as always, with JC Parets from All-Star Charts and Steve Strazza, also from All-Star Charts. Got a great show today. Let's see. We have some macro stuff. I know JC loves the macro. We are, of course, coming off of the Fed rate hike pause from yesterday. Just moments ago, we had the ECB raising their benchmark rate, so maybe that has implications for the market today. We have a couple of earnings to discuss. Hey, first big IPO of the year, kind of big, is today. Maybe we'll talk about that as well. Our guest today, we'll have Kimmy Circle, Sean McLaughlin, and our featured guest, Ed Clissold, Chief U.S. Strategist for Ned Davis Research. He'll be on in about a half hour from now at 9 a.m. If you're watching on YouTube, you know what to do. Smash that like. Let's start the show.
Boom, boom. I got a fun fact for you guys. Strazza, ready?
Sorry, Strazza. I don't know what happened there.
Hold on, Strazza, ready?
Yeah.
Fun fact. How fast do you think a cheetah can run?
I could Google it.
No, don't Google it. How fast do you think?
60 miles an hour, 70 miles an hour.
Oh,
Damn, son.
That's a very good. That's exactly right. 70 miles an hour. Good for you. I would have guessed 40, 50 tops.
No, they're fast as aren't they the fastest?
Yeah, that I knew. I knew they were the fastest land mammal.
Yeah.
I knew that they Tyreek Hill, they call him the cheetah, right? I get all that. But 70 miles an hour.
They can keep up with a car on the highway. Imagine.
Dude, that's crazy. That's really fast, man. So anyway, I went to the zoo yesterday.
All right. I'm not going to let you talk about the whole show, but let's just get it out. What was the best animal? What was your favorite and Alexandra's favorite?
My daughter likes the pigs, man. I don't know. I know.
Take her to a farm.
We do take her to farms. I think that's why she likes pigs. Dude, she loves pigs. For me, I mean, the cheetah was pretty cool. The lion was like on his back, like sleeping, taking a nap with his feet up in the air. That was pretty cool.
That's awesome.
Yeah. And then the bears was eating a salad. He had like a big piece of like lettuce, like big green lettuce, and he was crushing it.
Did you see the gorillas and the monkeys? How about the gorillas and the monkeys?
Yeah, the monkeys were a little boring, not gonna lie. The red panda. Red panda is a little, Nice. So we got my daughter a little red panda. She slept with it last night. It was lovely.
That's great. All right.
Zoo. Shout out to the zoo, Cape May Zoo. And it's free, by the way.
Was that your first time at this zoo?
No, I've been there a million times.
Okay.
Yeah.
Shout out to Saza Pro in the chat. Good morning from El Salvador. Good morning from El Salvador.
Good morning.
I want to know where everyone in the chat is from. If you're from around the world, just tell us. I'm curious. All right. What's moving? What is moving? State of the markets. Let's start state of the markets. Let's
All right, do it. Mr. Strazza, I could very easily get into some of these breadth metrics. It would very, very easy for me, of all people, to fall into that trap. But I'm going to throw a little curveball here, and we're going to take a look at the emerging markets currencies index making new 52-week highs. Ain't that some shit?
So what does this mean? Tell us all what this means to you.
Going back to, 2016, really, the correlations between stocks and the United States dollar have been very negative, right? They trade inversely. You saw it throughout 2017. The dollar got smoked and stocks did great. One of the best years ever, right? A lot of sentiment unwind from 2016. 2017 was a great year. And then what happened? Then the dollar stopped going down. In early 2018, stocks really struggled. And then after COVID, the dollar peaked, right? You had that fear in COVID into March. The dollar peaked and then got slammed after that. What happened? Stocks had their greatest 52-week period like in the history of the stock market, right? With the dollar getting slaughtered. And then a funny thing happened in early 2021. The dollar stopped going down, started to rally, and stocks really struggled after that. So what we've seen since the fourth quarter of last year is dollar weakness. Since really September, since the end of the third quarter, really, if you really want to get into the internals of the United States dollar, British pound, that bottomed in September 26th. The euro bottomed 2 days later. So you could date really the dollar weakness to late September, as a matter of fact. And how have stocks done? Stocks have done great. The S&P 500 was up 7.5% in the fourth quarter, another 7.5% return in the first quarter this year. And anybody want to give me the numbers on this quarter? About 5%, 5 and change or something like that so far in this quarter. You know what stocks don't do in bear markets? They don't go up every quarter, right? By definition, right? So think of it like that. So anyway, throw up the emerging market currencies chart, right? So as this line is going up, that's evidence of dollar weakness, obviously. So it's certainly not a bad thing. You know, we've seen some strength out of like Argentina and Mexico and stuff like that. Really haven't seen it out of Brazil. We're starting to see it now in recent weeks with part of this, you know, sort of rotation into other areas outside of growth and tech that we've seen the entire year. So am I like nerd alert here with leading with the emerging market currencies chart, or is this okay?
Yeah, definitely nerd alert, but it's speaking to a bigger point. What you're really saying is bullish risk assets.
Well, as if the emerging market currencies index is going up, it's some stocks are something I want to be buying right now. Do they just completely reverse today and start getting crushed and the dollar absolutely rips? Sure, that can happen, right? Of course. I've seen crazier things. The point is, you know, assets historically trend, right? Asset movements are not random; they trend. So something going up has a higher likelihood to continue to go up versus reversing. And whether it goes up or whether it goes down, despite all of that, I think it's important to watch this, because if this is in fact going up, it's really hard for short sellers to make money in the stock market, in my opinion. And then at the end of the day, you know, I'll get into the breadth. How can I not throw up the this is the advanced decline line on the S&P 500, right? I mean, these are, you know, people talk about how it's only 5 stocks. Like mathematically, the advanced decline line would not be pushing all-time highs if only 5 stocks were going up. Like, you know, where do people get this math? I don't understand.
I think this is a good one, a simple one. Most people know what the AD line is. This is just an easy one to debunk the whole it's only 5 stocks, right?
Well, how about just count? What happened to counting? Are we like, is society like too good to count? Like we need some stupid fucking computer to tell me that more stocks are going up than down? Like, why can't you just go and be like 1, 2, okay, that one's not going down. Okay, this one is 3, 4. Like, what happened to counting? I don't understand.
That's what we've been doing. But I like what we did this week, how we just scripted the characteristics of a reversal pattern right into our software and counted them that way. Let the computer count for us.
Did you do that? I didn't know you guys did that.
Yeah, man. 130.
Man, you guys are getting fancy, bro. You guys are getting fancy on me.
I mean, but isn't that really what we want to know when we look beneath the surface right now? I don't really want to know about new 52-week highs or new 6-month highs, right? Everything's got a different line in the sand. I want to know if the trend is now higher. And that's what we did.
There's too many lines for me.
I know.
It's too much.
I know.
I'm old school, Strazza. I count. You know?
Fonz, throw up the Shopify.
It's not just counting. 1, 2.
Yeah. We counted in 30 seconds, though. So this is what it is, just so everyone knows. Again, well, I know we've done this before. Primary trend is up. That's the 200-day moving average sloping higher. The relative trend is now higher. I mean, we could, expect more outperformance in the future. That's what you're seeing in the lower pane. Bullish momentum regime means that we're getting overbought on rallies and not getting oversold on corrections. And then we're above some sort of key resistance area. We're using the August highs and the year-to-date highs, which are where the red arrows are. That's it. Check those boxes. We're counting it as the trend is now higher. 137 stocks in the S&P 500 meet this criteria. Not bad, but it's lower than where we were in Q1. That's what's interesting.
Hold on. When did this become Strazza's state of the market? Wasn't this JC state of the market? What happened to that? Strazza stealing the show with all his lines?
You keep throwing it back to me.
When did this happen?
Do your thing. I
go to the beach for 1 week. Now all of a sudden it's the Strazza state of the markets. You let this shit happen on your watch, Spencer? This is bullshit.
Be careful. I'll throw back up the Strazza show logo in a second.
Oh my God. I heard about that. I disappear for 2 seconds. You guys just forget about me. Like I'm not even there. Throw up the Spencer, throw up, or Fonz, throw up the Dow Jones Transportation average. Stratton doesn't think this is a big deal. I'm like, it says like, how much was it up yesterday? I'm like 1.35%, whatever it was. He's like, oh, that's nothing. I'm like, well, compared to the rest of the indexes, that's a lot. And he's like, well, it's only one day. Well, yeah, maybe. It's a little more than one day, but that's not the point. The point is those dramatic outperformance yesterday on an event day, right? On an event day, and tremendous outperformance. So, yeah, I find that interesting. So, of the performers in the Dow Jones Transportation Average, C.H. Robinson, CHRW, these guys are truckers, right?
Yeah. Yes.
Trucker.
Yep.
My wife knows all these things, so she's in logistics. So like all these names, like all these transportation, shipping names, she knows them all. She's got gossip to tell you about all of them.
I have it here in integrated shipping and logistics, but from my understanding, this is a trucker.
Well, up over 3.5% yesterday, something like that, with the Dow down over 200, flat S&Ps. You know, I thought that was some interesting outperformance. I know you don't care, but I care. You know, I think it's interesting. Go to the next one, Fonz. Also seeing airlines hitting new 52-week highs because, you know, the recession and all that, and you know, financial banking crisis and whatnot. Clearly, they're buying airline stocks, which is historically usually not evidence of a downtrend in equities. New 52-week highs for airlines.
Now, this is a big deal.
Oh my God!
This one I'll give you. I mean, we want the weakest stocks to play catch up, right? And this is a great example of that is happening right now. Put up the Delta chart. I'm gonna talk on your state of the market.
14 days in a row.
I mean, most ever, and the last best streak was 10 days. I mean, this is like stock's been going up for 3 straight.
I'm gonna flip it back on you. Remember the other day we showed the Tesla was up 13 days in a row or something like that, and you're like, but what does this mean? What does this mean? And I was like, well, it doesn't necessarily mean anything on its own. It's just reiterating that, you know, these big growth tech stocks are doing really, really well, right? That was, you know, it's more information of the same, right? Just kind of confirming other things that we're seeing elsewhere. I would say that this is exactly the same exact thing, right? I would say that, so what does this mean, JC, bro? It's up 14 days in a row. What am I going to do with that information, right? Well, you're not necessarily doing anything specifically with that information. What it's reiterating is part of the rotation that we're clearly seeing in other aspects of transportations and industrials. Now, remember, the Dow Jones Transportation Index is 20 stocks. All 20 of those stocks are S&P industrial stocks, right? Which I know gets confusing, and some people might not understand what that means. The S&P 500, the industrial sector, these are things like Caterpillar, Honeywell, things outside of transportation. But all the transportation stocks are within the industrial sector, right? So all the transports are in the other. So if you're seeing rotation in the transportation in general, you're seeing it in the airlines, you know, Delta absolutely ripping it. You saw CHRW yesterday outperforming. Like, to me, all of those things stand out. And on the 14 days in a row, Strazza, what does it mean? It means that there's a bid in industrial stocks in general, which we already knew, and we're seeing elsewhere, obviously. But this is just further information. Like, it's more of that, bro.
Where are the sellers? Where are the sellers? 3 straight weeks. I mean, yeah, it stands out.
The sellers, my friend, were selling in the fourth quarter last year, and they are now buyers by definition. The short sellers are promising to be future buyers. That's how you unwind that trade. Shareholders are only promising to be future sellers, which I think people forget. You know, the short sellers are the ones promising to buy. You know, shareholders are just promising to share, to sell. So keep that in mind. And that's exactly what we saw. I mean, we saw heavy mispositioning coming into the year, very historic cash levels, coming off historic pessimism in terms of sentiment, huge short interest in some of the biggest names, and you're seeing massive unwinds. I mean, it's really what it is. So where are the sellers? They're buying. They're unwinding their poor choices from 6 to 9 months ago.
You see some of the components in the Dow Transportation Average?
I do. Why? What stands out to you?
JetBlue, they got some small stocks in here.
Yes. They do. I mean, transportation stocks are just, you can't compare transportation stocks to Apple. You know what I mean? Like, there's just, you can't. You're going to have smaller market caps. I mean, what are you going to do? Like these McDonald's, like these
Right.
are massive scale companies that have been scaling forever. You can't compare that to a trucking company. Like they can only get so big. You know how we talk about like shipping companies? Like when they're doing really, really well, they make absolutely no impact on the overall markets at all because
Yeah.
they're just so small. They're just not big companies. Just the nature of the beast, right?
Yep, that's fair.
Hold on, the YA before Spencer kicks us off. The YA, to me, guys, this is how to do it. You don't make money in dividend stocks by buying the stocks that pay the highest dividends. Like that's just not what you do. That's a great way to lose money historically, right? You want to look for companies that continue to increase their dividends every year. And for you old schoolers that remember the dividend aristocrats from back in the day, these are and still exist. These are stocks that have raised their dividends every year, 25 straight years. But by the time that's happened, you're probably not early in the life cycle of the company. So, sweet spot that we found is that 5 to 9 range. Companies that have raised their dividends every year for between 5 and 9 consecutive years is a great place to go fishing. And some of these yields are not going to be like the most attractive yields, but don't look at the yields. Look at the fact that they keep increasing their dividends. The reason the yields are lower than high yield, if you will, is because the price of the stock keeps going up. We don't want to penalize a company because the price of the stock keeps going up. We call those uptrends where I come from, right? Like that's a good thing. So it's more so the companies increasing their dividends every year to keep up with the appreciation of price so that there's an attractive yield, right? How'd I do? That's as fundamental as I get.
Dude, it's great. What name did you like more, Garmin or Constellation?
Dude, I can't believe that we're looking at Garmin chart. I'm here at the beach. I'm in Avalon, New Jersey, the southern tip of the Jersey Shore. It is fantastic. And so I was driving down. We had to take 2 cars because my wife likes to pack way more than this family needs to take on a 1-week trip. Nevertheless, we took 2 cars. So I'm with my father-in-law in the car listening to classic rock because he hates that rap shit, right? So we're talking about, how back in his day when he was coming down to the beach as a kid, they didn't have maps, right? So there was traffic on, you're stuck. It'll take you 9 hours and there was no Waze. There was nothing like that.
Yeah.
So anyway, I was like, yeah, before we had the phones, we had these little machines in the car. He's like, yeah, Garmin. I was like, Garmin, yeah. Whatever happened to those? I hadn't thought about this company since we got iPhones, right? And now all of a sudden it's like the trading gods come bring me this chart that comes out in the Young Aristocrats. It's like, what happened to Garmin? Well, here you go. Clearly they keep raising their dividends.
They're right here, still here.
So what does this company even do now?
I'll tell you, JC. They do a lot of like fitness tracking, wearable stuff.
Really?
Yep.
Yeah.
Wow.
Gadgets.
Yeah, they have smartwatches.
Good for them for pivoting, right? Good for them.
They still do GPS things. I'm sure they still do plenty there.
Good for them.
I had a Garmin like Fitbit equivalent, but it was a Garmin like 5 or 6 years ago. It broke after 6 months, and that was the last.
$20 billion company is not nothing.
Yep.
Paying 2.77%, and they've raised how many years in a row now?
17% 3-year growth. They have raised only 5 years. 3.3, kind of high.
So they'll be in our aristocrats sort of middle ground there for another 4 years. We get a little bit frustrated when our young aristocrats graduate into what, contender status? Is that what that's called after 9 years, Strazza?
They don't pay 3.3%.
No, they don't. 2.7.
2.7. Yeah.
Yeah, 2.7%. That's not nothing.
No, that's good. That's even almost high for me.
Right. Exactly. For this list, that's high. Yeah.
That's a nice yield. And
they're paying almost twice. They're paying almost twice what the S&P pays.
Yeah, I'm looking at their financials. Just quick check here. Everything looks good. Cash flows.
Hold on. Sean Donahue says they make golf watches. I would love to know what a golf watch is. What is a golf watch?
I know I'm annoying because I'm always talking about golf on here. I was gonna say I'll bet they do the golf apps now. This is
what is a golf watch?
You have watches, you got apps on your phone. I got things that I'm sticking in my golf clubs that track exactly how far I hit every iron now. It's some really cool stuff.
Also, apparently they do a lot of boating navigational stuff if you're a
Wow,
boat
look at
person.
Garmin, huh? Crushing it.
GPS
Good for them.
GPS systems on boats are still very real things.
Good for
That's
them.
true.
Well, yeah,
Yeah.
for sure. And then so they're based out of
Sorry, what?
they're based out of Switzerland. I didn't know that.
Wait,
Makes sense.
does anybody? Once upon a time, it was a 2-horse race in the navigation game. It was Garmin, and the other one was TomTom. Anybody remember TomTom?
I do not.
Oh man!
Yeah, one of
All
those.
right.
What happened to that? They got bought, I'm sure.
Yeah, I don't even know.
All right, fascinating. All right, Spencer, what's next?
We got a couple of earnings today, and
What do
then
we got?
we're about done.
Wait,
Hopefully,
Wait. Dividend
Wait.
fun facts. Verizon's dividend, AT&T's dividend. What are they right now? Any guesses?
5.5.
I was not gonna.
No,
well, yeah,
sir.
I was gonna say like 3, 4,
No, sir. No.
How bad is it?
7.
7.
Jesus
Oh my gosh.
Christ, these things suck.
7.3%. These
And
guys.
the reason is because the stock can't go up. That's the problem.
Yeah.
Well, also, the payout ratios are 70, 80%. Like, it's everyone has accepted they're not paying these yields.
Starting when, though? Starting when?
They cut them like every other quarter. They're constantly cutting, but they can't keep up with the how quickly the price falls. Their stock. So no, these dividends aren't real. So that's what you kind of have to beware of.
All right, what do we got, Spencer?
Let's talk home builders for a second. We have Lennar earnings this morning and one more, but let's talk Lennar real fast. All right, Lennar has said, thank the Lord, that they're going to build more homes next quarter. So the earnings report, EPS
Why
came in.
thank the Lord? Because there's more supply, prices go down, you can buy a crib?
Yeah. EPS beat, sales beat. They said they continue to see the housing market normalize and recover during the quarter, and then they raised their home delivery guidance for the current quarter that we're in right now. I'm sorry, for the year. They raised it for the whole fiscal year. They raised it by like 4,000 homes. So they're going to build around 68 to 70,000 homes in the fiscal year. And as someone who's looking to buy a home, that makes me happy.
I was told that it was only 5 stocks going up, Strazza. Do those 5 stocks build homes now too?
Great chart, huh?
I mean, listen, it's not anything new. Obviously, we've been pounding the table on home construction because it keeps making new highs in the face of what we keep being told is a recession and the end of the financial system as we know it. Yet here we are with home builders pushing up against new highs. Now, with that being said, here's Lennar at those former highs, right? So when we go back and see where there's precedent, you look at a stock like NVIDIA absolutely ripped through those former highs like it wasn't even there, right? So, and yes, we could say, well, that was a one-off because of AI. Yeah, maybe. The point is, look for other stocks that are approaching those former highs and see what they're doing, right? The more and more that are exceeding those former highs, the more and more that are ignoring and not really, running into overhead supply and just ripping through those levels, the higher the likelihood that more of them are going to do that as well. So this Lennar, I think, is a great example. Market top at some point in 2021, depending on what sector you are in. This is no different. And here we are back to the scene of the crime. So, in home construction, we look at those as leading indicators for sure. Like when we talk about the stock market, like we were talking about shippers before, like nobody cares about the shippers, right? It doesn't matter. When we look at the most important industry groups, you're looking at things like, in my opinion, semiconductors, things like home construction. There are like certain sub-industry groups like that are tremendous gauges for the overall market. And I'll put home construction right in there with semis. Like we can say semis these days because of AI or whatever, fine. But zooming out, to me, home construction is right in there, no?
Easily.
So here we are back to the former highs, not just in Lennar, but in the home construction index as well. So let's see how it reacts here. I mean, this isn't a trade that I'm going to be putting on right now. It's more like, wow, look, another, pushing up against new highs again. These things have had a massive run. Honestly, I'd be surprised if we didn't run into some sort of resistance here. I mean, I'm not going to short it. I'm not going to buy it either. I'm just observing for right now, but it's really interesting. And Lennar's up, 3.5% pre-market, 118. Does that put it at a new all-time high? It's going to open up at a new high. Yeah, man. The closing all-time. Oh, this is on a weekly closing basis. Hold on. So the all-time high close. I mean, we're right there. I mean, if we open up above 118, could be talking about a gap and go? We're at 118.60 right now, Strazza. So now that I'm looking in a little bit closer, man, if we're above 118, now you got a gap and go potential. There's something there. If it could stick the landing today, we're futures. Markets are flat. There's nothing going on today. Nasdaq's down 50 bips. I got to tell you, if it could stick that landing today and hold above 118, that's your trade.
Yeah,
I think that's your trade, because these gap and goes can be very powerful. Because what I was just talking about is how I would be surprised if Lennar didn't at least acknowledge these former highs. Granted, this is our second visit here in the last couple of months, so it is somewhat acknowledging it. But to gap above that level is sort of confirming that demand has finished absorbing all that over that overhead supply and can now move on. Right?
Throw up chart 5. If you're wondering where this one could go.
Yeah, 118.
This is the best home builder out there right now. Green Brick Partners. You heard of this one?
It's almost like 117 and a half. Sorry that I'm obsessing over this. I'm a really big fan of the gap and goes. And I didn't quite realize that it was doing that pre-market, 17 and a quarter. Yeah, you're looking at 17.30, 17 and a quarter. If we're above that, the trade is long Lennar. It's got to stick the landing. I got to see it. I'm very interested in that. Now, if we're below 117, we're below that, leave it alone. Let it continue to consolidate. That's a really interesting setup in the Lennar.
The point I'm trying to make with GRBK is that we've seen similar patterns like the one you're talking about in Lennar break out already, whether it's a company like Taylor Morrison Homes, TMHC, already ripping new all-time highs, Pulte Homes, PHM.
But we're talking about a much smaller company at 2.5%. So you really got to be in the calm, and I can't imagine that the options market is too liquid there. And Lennar, you're looking at a $32 billion company with a very liquid options market.
You're not listening. I'm not saying to go buy this one. I'm saying this is what Lennar could look like in a couple months. We've seen these patterns break out in other home builders, and we've gotten some really nice legs higher. I'm just giving some examples. If you want a bigger one, go look at Builder First Source, BLDR. That's 17 billion. Looks the same as GRBK.
Look at Strazza, expert in the smids of home construction.
I'll be back in 1 minute for Ed. This will be fun.
All right, nice. All right, Spencer, you want to rip through the chart report quick?
No. I want to finish doing this real fast. We had Kroger as well. I just wanted to mention that because we have the chart handy. I think it's trading down this morning. Their EPS came in above estimates. Their sales missed a little bit, slight miss on the sales estimate there for Kroger. I think last I checked, the stock was down $4 from the.
So we're looking at $34 billion in grocery stores here, down 3.5% pre-market, 45.65 or so. You're really looking at those late 2015, early 2016 highs, right? That was support last year. If it's above those levels, there's nothing really to be short. I don't know how attracted I am at a $34 billion grocery store chain.
Kroger is kind of the only national grocery store chain we have in this country.
I've never been to a Kroger's. I only know it exists because of the stock.
I think they might have the largest geographical footprint of any grocery store in this country, which just doesn't mean anything really, because it's a regional business. I'm just sort of commenting that they're everywhere, and also they're kind of dumpy, just to be honest. Anyway, okay, it's 9:00. We have our first guest here. Let's bring him on right now. Featured guest the other day, Ed Clissold, Chief U.S. Strategist for Ned Davis Research. Let's get him on the show. Where's my featured guest bumper? Izzy rearranged all my stuff yesterday. I found it.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ed, what's happening, my man?
Not much. Just living the Florida life down here. Low of 80 degrees, high of 89. So yeah, I'm happy to be in air conditioning. That's for sure.
No, I hear that. It's actually perfect here in June. I'm in the southern tip of the Jersey Shore down in Avalon for the week, and it is lovely. My wife's complaining it's not warm enough, and I'm like, man, this is pretty perfect if you ask me. So,
we'll send her our way. We'll after 36 hours, she'll be missing the Jersey
she'll be ready
Shore.
to come back.
Yeah.
Where
you know, Ed, what I like about it, I always learn something from you. You know, you're one of those guys where whenever we have a conversation, you know, everybody has fun facts, but I feel like I am generally more interested in your fun facts than I am other people. You know, you bring a lot to the table, so I've always appreciated that.
I'm going to tell my kids that because they think all my dad facts are boring. But I'm going to tell them that JC says I have strong fun fact game.
They're cool. I mean, they're cool. We're highlighting your fun fact game on the best morning show in finance. So I mean that goes a long way. I don't know if they're viewers yet, but they will be one day.
Yeah, my 14-year-old daughter, I don't know. She may not find this quite as cool as maybe some other YouTube channels, but we'll see.
Fair enough. All right. Well, I'm being told only 5 stocks are going up, Ed. You think people are just bad at math? What do you think is going on there?
Yeah, actually, when I do hear things like that is when I do question the quality of the math education in our country. Because no, that is not what's going on. Look, 5 stocks or so have been leading, and they're responsible for a large part of the gains. But there's 2 problems with that math. First of all, if you take like an index like the S&P 500, there's 500 stocks. Well, a lot of them are going to be down. So in any given year, it's a cap-weighted index. The biggest stocks drive the gains, and there are a handful of them are going to go up, and they're responsible for most of the gains. So that's not new. It's just when you're subtracting all the negatives. Sure, you can find a few stocks that kind of tell you how the math goes. But the problem with narrow markets is if everything else is going down, and that's not what's going on right now. There's plenty of stocks that are going up. They're just not going up as much as these mega caps, at least, you know, until recently.
At least this year, in the back half of last year was the opposite. Yeah,
you know, that's a really good point that, you know, you have to, you know, I know a lot of people are benchmarked to certain points in time, like beginning of the year, but you know, the market doesn't really care as much about that. And so if you look at
a little bit of a shift into growth at the beginning of the year, maybe more coincident than anything else. This year, anchoring to the beginning of the year, I agree in your point generally this year, because that's when things shifted around that first week of the year. It's a little bit different, no?
Well, I mean, look, I'm sure there were portfolio managers who were positioned for value, and then they window dressed in the year. And then, you know, there's a January effect where, last year's losers can bounce back, and then it kind of took on a life of its own. So sure, that there's part of that. But to look at what's happened this year without any context of last year, which was the worst year for growth versus value since 2000, is kind of missing the big picture.
Strazza?
I saw you on one of the news networks. I think it was late May, and you were making a good point. You were talking about breadth, and you're saying we really need to see the beaten down groups, like, you know, pick up the pace here a little bit. I think you were talking about value, cyclicals, small caps. There's been probably a month, couple weeks since you were on talking about that, and we've started to see some sort of expansion into those groups. Is it enough? What are you seeing from this rotation over the past few weeks?
Yeah. So what we do want to see is as you said, we want to get the stocks that haven't participated as much, just to be part of the story here. And you started to see it. You know, you're not going to fix something like percentage of stocks above their 200-day moving averages overnight. That takes time. But if you look at percentage of stocks above their 10-day, 21-day moving averages for small caps, an area that got hit really hard after the Silicon Valley Bank news broke, they've actually come back. And also, if you look at the Russell 2000-1000 ratio, so just comparing small caps, large, So if you were to look at that over the last few years, it got crushed during the shutdowns because only a few large stocks allowed to continue to operate. Huge reopening trade, gave a lot of it back, and then the latter part of last year, they started to actually act a lot better, and that's probably the reason why we got positive toward the end of last year. We're like, hey, some of these areas weren't working as we're starting to work better, and then Silicon Valley Bank hit, and you can see they just got hit really hard. But notice they've held those 2020 lows.
Yeah.
And look, they could always break down if they do. I think that's a pretty negative story. But that 2020 low actually represents really a downtrend that started in 2011. This is like 12 years of small caps underperforming. So if we can hold this, small caps can start working higher. I think that there's a really big story here.
This is a big reason why we bought small caps, because of the retest on a relative basis. Yeah. Can you just touch on how important relative strength is to you? For me, it's like it's a big reason why we bought so much of it so aggressively.
Yeah, it tells you how people are positioning, right? Look, we look at the absolute too, and the Russell 2000 is actually held well above last year's lows on an absolute basis. So, but we look at relative a lot. It tells you where people are positioning, and it just gives you a really good message of how the market has is acting and where people are getting interested. And we don't want to get too hung up on like one data point here or there, but we've seen time and time again that these support levels matter. Like for example, coming out of 2011, small caps started to underperform. Then you get to 2013, early 2014, they made a run, couldn't break out, and then it was just a slow drip for the next 7-8 years. And so that failed breakout told us something.
So when we look at some of these, some of our favorite relative trends right now, we talk about something like small caps coming off support, but then there's also staples making new lows on a relative basis. Discretionary making new 52-week highs relative to staples. High beta making new 52-week highs versus low vol. Finally starting to see, this is a good example. This is SPHB, SPLV. Some of these risk appetite ratios really speak to, more offensive environment than we've seen.
Yeah, and I think what happened last year is the market declined in expectation of a recession that just hasn't happened yet. Yeah. I think the story was, well, the market has never bottomed until after recession has started. So if we're not in a recession and we're going into one, the lows aren't in place. That's a pretty understandable, simple narrative. But what that was missing was that the market peaks on average about 6 months before the recession starts. Well, if you're using that January 2022 peak, we are now 17 months later. The longest we've ever gone peaking before a recession is actually 17 months. Happened in the 70s, happened in the late 50s twice. We're going to blow through that. Nobody's calling for a recession starting now. Right. So absent some sort of catastrophe, what the market, what that bearish narrative missed was that maybe the starting point was the wrong point. Is that maybe we shouldn't be starting from January 2022 because recession didn't take place. Now we have a room here for the market to rally, and these kind of higher beta, more economically sensitive areas are telling us economy's in pretty good shape, which would then support the idea of value doing better, these cyclical areas catching up, which would have a good breadth message as well. So all this kind of combines together to give you, a pretty positive message for the market, at least for the next few months. We'll see after that.
When we talk about the S&P 500 peaking at the end of 2021, early 2022, and sort of that being the top and us being 17 months into, I really like that point. You talk about how maybe they're using the wrong top. By the end of 2021, most stocks had already peaked, right? Most stocks were already going down, right? So, to me, it's disingenuous to pinpoint that moment in time as the top in the market when there were barely any stocks that were still going up at that point. In the same way that people are talking about the October lows in the S&P 500, by the time the S&P 500 made those lows in October, most stocks had already bottomed in Q2, right? So,
Yeah.
I think when you're thinking about the overall market of stocks, I think it's important to remember that that's what it is, and maybe be less reliant on indexes themselves, right?
Well, so the way, first of all, yes, I agree with you. Ultimately, it's a market of stocks, not a stock market. But what you can do is then use that as a predictor for the indices.
Right.
So, in fact, what normally happens is that the absolute trough in the average stock happens before the cap weighted indices. So normally get this, we call a waterfall decline, a bunch of stock, everything kind of falling together, usually takes about a month, and you get like huge declining volume versus advancing volume ratios. We actually got that several times in Q1 and right after the invasion of Ukraine, and then again in June of 2022. And then you got to August, rally into August, and then you come down to October lows. You got fewer stocks making new lows, fewer stocks below their moving averages. That declining advancing volume was a lot less severe in October than it was in June. And that is a positive divergence that you like to see around a market bottom. And so that's when we started to think, hey, maybe there's a nice low forming here.
You've seen it a million times. By the time the March 2009 lows came in, most stocks had already bottomed. Like they bottomed like on the Lehman moment and all that, months earlier. So you see it again and again in both directions. So I think market breadth is really important. You guys do great work. Before we let you run, Strazza, we cannot. Strazza's. I really like sentiment more than Strazza. For me, I want to know. We're obviously not where we were, right? Because you need bulls to buy stocks to be in a bull market, right? So you've seen somewhat of a shift, but we're coming off some of the most historically pessimistic levels that we've ever seen. So number one, can you touch on how extreme was that? Can you put that into historical context? And number two, how far do you think we've come, and how far do you think we go in that sentiment unwind? Because we're not in a reversion to the mean business. We're in a reversion beyond the mean business, is how I learned it from John Roque, which has always stuck with me. So talk about where we came from exactly, and how far you think we can go and where we are in that process.
Why don't we throw up chart 2 while Ed answers this?
Yeah, great. Yeah, so this is our crowd sentiment poll, one of our most popular charts on our website, updates every Wednesday. And so there's several different inputs into this, like put call ratios, polls of individual institutional investors. So a low number means there's widespread pessimism. And we were in that extreme pessimism zone. So below that dashed line, the bottom dashed line, from April of 22 through early February of 2023. That's the second longest run ever. Only 08-09 was longer. So if it felt bad, it's because it was. And look, there's so much negativity about the Fed cycle. Powell said we'll push the economy into recession, 2 negative GDP prints, earnings were collapsing, plenty of reasons to be bearish, but it was in there for so long. If you were going to get bearish, you had all year to do it. And so by the time we got out of that, when the market started rallying in January, what happens when you get pessimism that pervasive for that long, there's just a lot of skeptics, and it takes a while to get everybody off the sidelines. And like you get some bad news, like second biggest bankruptcy from a bank in history, that's going to spook people, and that's what happened. And so we've been climbing the wall of worry. When this updated yesterday, it's still kind of in the neutral zone, not quite to the optimism, but we're getting there. But yeah, JC, as you said, it's not like you get into optimism and that's the end of the game. Each cycle is a little different. I'd probably want to see this get well into optimism and maybe even stay there for a few weeks before I'd get more concerned. And what would really bother me is, let's say some bad news hits and this doesn't come back down. So people, instead of everybody being afraid of the first sign of trouble,
right,
the narrative is the opposite. Oh, this is a Teflon market. Who cares?
Let me ask you this, Ed. How do you quantify bad news?
Well, bad news becomes good news, right? And that's when you get more concerned. Yeah.
Ed, the fun police is coming.
Hold on, one more quick one. like, what did you do with the back-to-back quarters of negative GDP last year, Ed? Are you guys treating that as a recession or no? Because
Nerd alert.
Yeah, well, what we do for our studies, and we want to get really nerdy. We have very specific criteria, and we have these intense debates in our strategy meetings. I mean, if you want to go nerd alert, come to an India strategy meeting. But we go with.
I would love to be honest.
be careful.
Yeah. Well, no, they're fun, lively discussions. But yeah, we use the NBER official definitions, and they said it wasn't a recession, so that's just we'll go with that.
Yeah. All right.
But there was a business cycle to what happened last year for sure.
Right.
Cool. All right. Ed Clissold, Chief U.S. Strategist, Ned Davis Research. Ed, thanks for coming on.
Thanks,
Ed.
Enjoyed
Thank
it, guys.
you. Come back soon.
We'll do.
All right. It is 9:16 now. And that means it's time for Kimmy Circle. We bring her on every day. She tells us what she is eyeing, what she traded yesterday, what she may or may not trade this morning at the open. Let's see what she's watching.
Kimmy.
What's up, guys?
You there?
Hi.
Okay,
What's
we got
up?
it.
Pretty good day yesterday, huh?
Yeah. I stopped out of SQ. The thing drives me crazy. You know what? I'm putting that on my do not touch list.
You made money in Alibaba. Shocking there, Spencer.
Yep. Cisco took a tiny little few cents, 4 cents. I just stick it on there just so people know that, like, what I stopped out of. Made money on Bob. I should have held a little longer. Target, we traded. I saw it moving. I didn't stay with it that long because of the Fed. I didn't know how, it was the first real up move in Target in a while. I think they just increased their dividend this morning, so it's up again. So I'll watch that again today. I'm going to watch Nike.
Are you shorting Nike, I take it?
No.
You're going to go with it?
Potentially.
Really?
Listen, sometimes when you have big bar days like yesterday in Nike and Target, either sometimes they fall back into the bar halfway, or sometimes they just keep going. So I have to see how they handle it. It could pull back like some of yesterday's move,
It's down a little bit. I mean, it's pretty flat pre-market.
Yeah, so we'll see. I have to see the way it trades. Sometimes I could give a recommendation and it just doesn't come to fruition, right? I have to see the way, things
And let me
trade,
ask you
how
this.
they act.
And then let me ask you this. Is it because Nike got crushed by so much and now it's coming back that you think it's got further potential to rally versus fading such an aggressive move, which you've done very successfully, I might add, in other areas like in NVIDIA and things like that over time?
It's like an oversold bounce. I'm not saying right now people are jumping on the bandwagon, like they're like, okay, this isn't rallying, let's go after this. This is like kind of like, when you get the memes going, when you get the junk moving, and you get like the oversold names like, a Nike or Target.
Well, hold on. So you're trend following more because of the overall environment versus other times you're more mean reversion in nature. Is that what you're saying?
Yeah, I guess so.
All right.
It all depends.
I like it. No, I like it. Listen, I'm totally down. I thought you'd be fading this, but I really appreciate the fact that you're looking to go with it.
Listen, the market's very extended here. It would be wise. It'd be healthier if the market contracted.
Any thoughts on what happened yesterday? Sold off, came back a little. You had some big winners among stocks, right?
Yeah, it'd be nicer if the market just takes like a nice, listen, tomorrow's OPEX monthly. So we'll see. They might keep the market bid up, so, it might not fade till maybe next week. And I'm not saying like we're crashing and burning, but maybe, a nice pull in down to the SPYs, the 422 area, 423 area is not terrible. Do you know what I mean? That would kind of like, help the market and settle it some.
Before we let you run, what is in your perfect world, Kimmy, and then I'll let Strazza ask her. In your perfect world, Kimmy, where are you buying Nike in your perfect world?
In my perfect world, let me see. Where am I buying Nike? Yeah.
Like how low do you think?
How low what?
Because like for me, like I would be looking for this pullback and then I would be buying a breakout above yesterday's highs is sort of how I would look at it. You're looking to buy the pullback instead?
I want to see how it handles 112.30 to 112.50. Okay. I want to see how it dances around that area. If it stays below, it could contract to 111.40, which is fine, which would be healthy. And then I'll come back to it. It could contract to that level today and then reverse back up. So I have to see, or maybe it just goes full speed ahead up. You know what I mean? I have to see the way it trades, so that's the whole thing. And sometimes you capture it right.
We'll be watching.
Sometimes you capture it right and sometimes
I'm
you
ready
don't.
to go. I'm in. I'm in the Nike trade with you. I like this. I like what you're doing here.
Strazza, what do you
I'll
got?
be watching Target again today because we did trade it yesterday.
Yeah, and I didn't get in your deer trade yesterday. I was going to. I went to
That
the
was a
zoo,
nice little pop. That was a nice
What?
little move.
It was a nice little move, but I went to the zoo. Listen, I can't day trade every day, but I do what I can when I can. Strazzy, what were you gonna ask her? Quick.
I want to know how you treat IPOs and new listings. Are you fading the falafel today? Are you trading this kava?
Ooh, fading the falafel. Bow, 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 bow.
Me? No, I don't bother with on.
I don't fade falafels.
I
New
don't.
York.
I love falafel.
Not trading falafel, but not trading today's IPO. Got it.
No, I don't mess with that.
You really don't.
Leave that to the professional traders.
How many days do you let go by before you get in? How many days?
What'd you say?
How many days do you let go by before you get in?
I'll let it, pattern out for like a month or so. A couple months.
Wow. Okay.
Need some sort of price history. Otherwise, what?
No bullshit.
I could be a little chicken.
No.
I let the room know when I'm a little
You don't
nervous.
need price history. We'll let Kimmy go, and then Strazza and me can argue.
Price history, an hour is still history, right?
Exactly. Thank you, Spencer Israel. Somebody's paying attention.
Do you guys trade?
I'm just
IPOs?
messing. I do it.
Hell yeah.
I do it when I want to have fun, but not seriously.
It's not supposed to be fun.
No.
Right.
I meant. All right.
Kimmy
Circle. Kimmy runs a
live.
live trading room. She's trading
See
the
you
open
guys.
every single day. It is a premium service. If you want to join her room, it's very simple. There is an email and a phone number on the screen. Email the email, call the phone number, and we'll tell you how you can get into Kimmy's room every single day. Okay, 9:23 here. We got a few minutes till the open. Was there anything on the hot corner today?
Yeah. So no, hold on. So you don't need.
Oh God.
You don't need price memory to trade the IPOs. For me, it's very simple. Like right off the bat, I only want to be long if we're above like the IPO price. Like that's my anchor. That's my anchor at the beginning, right? Like
you and everybody else, JC.
Well, fine. Fine. And now we have an actual price, and then, ultimately, let's say we sell off, right? That IPO price becomes overhead supply, becomes resistance, right? So if we break out above that, I can use that as support and put my stop below that. Like there are, I appreciate where Kimmy's coming from. She's waits a month. Great. Everybody has a different process. I'm just saying you don't need to wait a month. Like what Spencer said, an hour is information. It's true.
I was joking. What's up, Steve?
No, but it's true.
I have nothing for this. I love you, man. You're hilarious. I love it when technicians tell me that they don't need price memory. I just love it. It's really good.
You do need price memory. You just don't need a month.
Oh, okay. Got it. So 1 minute, one minute candle. We're good.
Do you not want?
Okay, that's a fair question. So how many minutes do I need? I don't know. Usually the next day. I'm usually not trading the day of the IPO price because first of all, who the hell knows what time it's going to come out? They always tell you a time. It's never on that time. The bigger the IPO, the longer it takes. It's this whole freaking to do. So I'm into it like the next day, I guess. 1 day of trading, 2 days. How's that?
You're playing with fire, especially on day one. The last time, don't roll your eyes. Last time I traded an IPO, the ticker was FB. We used to call this company Facebook. It was a total disaster.
That was a bad one. Yeah, that was a bad one.
Broker owed me thousands of dollars. I got a check in the mail like 6 months later. Not doing it. It's not for me. It was
a day or two, I think, is good. If you have the time to be in front of your computer all day long, I do not. And you could just wait till the stupid thing ultimately goes public, and you never know because it's always wrong. Like if you have the time to do that, knock yourself out. If you don't have the time to do that, wait a day or two. Like that's how I look at it. There's nothing. By the way, if you do have the time to do that, good for you. I used to 20 years ago, right? I don't now, right?
Who even wants to do that? How big is this company? Anybody know?
I think it's going to be $2 billion. I want to say.
How many locations does this company have? I've never heard of it. I've never been to it.
2.5 billion. I just was at a Kava the other day. I should have gone. I should have gone in. I didn't.
Yeah, boots on the ground.
I know.
I need to do some channel checking.
Yeah.
Wait, I'm in the prospectus right now, but I'm more interested in what they say about their risk factors than anything else.
Speaking of locations, and Kroger, never seen one. I don't think it exists. I don't think there's
That's
any
what
Kroger.
I said. I only know it exists because of the spot.
All right.
Hold
Let's
on.
find out.
I want to do some channel checking. Strazza always wants to do channel checking at RCI Hospitality, but for me, I'd like to try this. I'd like to try this restaurant.
God.
They don't have it. There's one in Lancaster. I'm not going to Lancaster. Plymouth Meeting.
Man.
Do they have them in New York? They don't even have-
yeah. They have Kavas.
Wow, they're all over New York. All right, next time I'm in the city, I'm going. All right, cool.
All right, fair enough.
Kroger's in New York City.
Not Kroger's. The falafel joint.
Yeah. All right.
In all seriousness, with regards to Kava, $2.5 billion is the valuation. 22 is the IPO price. Largest IPO of the year. If you want to compare it to something,
this is the largest IPO of the year. It's only less than $2 billion.
Shake Shack is only $3 billion. The fast food company.
If you want to just think back to recent history, the last fast casual restaurant IPO we had was Sweet Green, ticker SG. That was sort of at the top there in 2021.
First of all, Chipotle's almost $60 billion, so don't be hating on market.
Yeah, so Chipotle
and McDonald's is $200.
Chipotle is like the best case scenario here for this company. The worst case is Sweet Green. So there's a wide range of outcomes.
Yum Brands is $40 billion.
It's a different business. It's a different type of restaurant.
It's Americans?
What?
It's an American company?
Good question. Yeah, I believe it's American. Yeah. They serve Middle Eastern food, but I think it's an American company. But it's fast casual, so it's more like a Chipotle than it is like a Burger King, right?
So I'm getting the thumbs up. People like this place, huh?
Sweet Greens is one of those chopped salad places, right?
Yeah, and their issue is that they're all in the downtown business districts, which is obviously not great when people work from home. So
they're from DC. They're Greeks from DC. That's cool.
There we go. So anyway,
Greeks.
Kava, CAVA. Do we have the IPO chart? I just wanted to pull up the IPO chart for like just a second. This is the IPO ETF. It holds anything that's IPO with some discretion. IPOs if you've IPO'd in the last 3 years, you're eligible for inclusion in this fund.
Who decides that you get into this fund? Is it like 3 suits in a boardroom somewhere in Midtown, or
Renaissance? I mean, there are rules, right?
This isn't NOM.
There are rules. You have to have a certain market cap, certain liquidity. Top holdings right now, just to give you an idea: Snowflake, Airbnb, Palantir, DoorDash, Li Auto, which is a Chinese EV, Roblox, Coupang. So,
you guys want to talk about Turkish online retail?
What? Strazza is very bullish. Breaking news: Strazza is bullish Turkish online retail.
It's cool because every now and then we get like this new, it's the Amazon of blank. And a lot of times these companies are, can be pretty exciting. Shopify, example A. So this is now a Turkish online retailer. I marked up the chart yesterday and dropped it in the chat. Do we have it, Fonz? My Optima's down. Do we have it? Maybe we'll come back to it. It's called D-Market Electronic Services and Trading.
What's the ticker symbol?
HEPS. HEPS. They need a new ticker symbol.
Yeah, that's a terrible ticker symbol. But it looks like a lot of these other sort of bases, right?
Yeah, it's a nice base.
I mean, it looks here. I'll throw it up on the thing.
All right, and then Nikki, someone just said there's a Kava near me. I'm going to go to Kava this weekend and report back.
Yeah, please.
Okay.
Go have a flop.
I'm going to go next time I'm in the city. I'm in the city next Thursday.
Wait, hon. So this is Turkish e-commerce? Is that what this is?
Turkish e-commerce, baby.
So is this like the Amazon of Africa, but the Amazon of Turkey?
First of all, it's a $500 million company, so it's a tiny little market cap. So be careful. So while we're talking, there's no volume. So be careful with this thing. Keep that in mind.
So this is This is the Amazon of Turkey Amazon of Africa of Turkey.
Except in America, Amazon is one of the biggest companies, and globally, this is one of the smallest companies. So just be careful.
All right. Hey, I never heard of this. This is new for me. Cool.
Me too.
All right.
Interesting.
Turkish retail, not for the faint of heart.
9:30 market open. We're gonna have options. Sean McLaughlin here in a couple minutes. Let's do the hot corner real fast. And were there any notable transactions that you wanted to highlight?
Hit it.
No.
Not really.
Well, all right.
So hot right now.
So why are you hating on the latest hot corner?
There's nothing here.
Yeah. Well, what about these auto part companies? Now this dude is buying the AutoZone now.
Yeah, we keep.
Why is everybody buying these freaking auto parts companies?
AZO is one of the better looking ones. What I was thinking of yesterday when I mentioned that about AAP. But look, I mean, you want to buy this on strength.
Yeah, for sure.
Right?
You don't think it's interesting that we keep seeing all these insider transactions?
Yeah.
I feel like you don't care.
No,
I feel like I don't even know you.
I don't love this chart.
And then what about this shitty REIT that this guy keeps buying? About another $18 million worth?
Yeah, it's a small REIT. Go back to the table.
This guy, how much did he buy the other day? 13 million. Now he bought another 18 million.
Yeah. It's a healthcare REIT. I mean, look at what it's been doing as he's been buying it. Something's going on here, but it's $700 million stock.
They don't even pay a dividend. What kind of REIT?
Yeah.
You know how shitty of a REIT you need to be to not even pay a dividend?
Wait, don't you have to pay a dividend?
Hold on.
They must.
No, you just need to be a real estate investment trust. Oh no, hold on. They pay a yield 1.3%. They pay 1.3%.
I was gonna say I thought you had to.
No, they do. But whatever. Like
Something's going on here. He's buying stakes in this thing like every day. I don't know if it's just running because of the insider filings or if there's something else. We'll have to check the news on this one. It has been on the list, several times since last week or the week before.
Wow.
Mm-hmm.
I guess maybe it's not that shitty of a REIT after all. He clearly doesn't think so.
Well, it's encouraging just to see insiders buy REITs.
It's a lot of money too. It's not nothing. How rich is this guy?
Probably pretty rich. I don't know.
Adam Portnoy? Who is Adam Portnoy?
You're asking a lot of questions today, sir.
He's the CEO.
Well,
he
thanks.
Is and CEO of RMR Group. He's a real estate person.
Oh, all right.
Oh, Caesar says it's mainly senior housing. I'm pretty bullish on that.
I don't mind the Caesars chart. If there's one that I like from today's list, it's the Caesars chart. You got a nice little base shaping up there. It's probably not ready yet. You do have a shelf of highs from, Q4 of last year, Q1 of this year. Don't know if we have the chart. About $55. And look, casinos, lodging, hotels, gambling, this kind of stuff has been working. And it traditionally does work pretty well regardless of the economy, right? These vice goods and services. If you look at the gaming ETF, it's BJK. Not bad. 50% since last year's lows in casinos. So Caesar's one I would watch. There's probably better looking names though in the space.
Real fast, both you said you've never seen a Kroger. They're mostly in the Midwest and the South. Strazza, get on up to Georgia, and you'll find a few Krogers there. Okay, 9:34.
Strazza doesn't go north of West Palm.
Yeah, I'm aware. Let's do the chart report real fast, and then we'll go bring on Sean McLaughlin here.
For the record, I'll go up to like Jupiter, maybe even Stewart, but nothing north of that.
I definitely never did.
All right,
my family never took it unless we were going to Disney World. There was no reason to go north. We'd always go south to the Keys. Growing up in Miami, it's just what it is. It's not anything against. I mean, I guess it is against north of Florida. I don't really like the north of Florida. I like Miami better in the Keys.
Here is yesterday's edition of the chart report. Let's go to the chart of the day from a friend of the show, Michael Noss. Just looking at action in the SPY ahead of the FOMC thing, or actually after the FOMC thing. Just a lot of indecision yesterday what chart that I liked, if I can scroll down a little bit.
Hold on. This is good, Spencer. Let's talk about doji real quick.
All right.
JC, chart school. What is a doji? What is the point Michael's making here? He's saying it's just chop, and then he points out a particular candle.
Even I know what a doji is.
So tell us.
Well, a doji is a type of Japanese candlestick that is evidence of indecision, right? So it basically means it rallied throughout the day, it sold off throughout the day, and then it closed basically where it opened. This is what would be referred to as a long-legged doji. For those of you who are into the names of Japanese candlesticks, as opposed to a dragonfly doji or a gravestone doji. A gravestone doji would be where it would open and close at the lows of the day. So it would rally throughout the day and then close all the way down at the lows, right pretty much where it opened. And then a dragonfly doji is the opposite. It's like a hammer. Sells off during the day and closes where all the way back to where it opened up, right? So in this case, the long-legged doji closed pretty much right in the middle. It's just evidence of indecision is all it is. It tends to show up at turning points, no doubt. Go back and, think about the markets kind of like the hills of Tuscany. When you're driving through the hills of Tuscany, what do you see? You see all sorts of hills and then beautiful, villas and stuff like that on the top of each of the hills. In the hills of the stock market, you tend to see dojis, a lot of sort of reversal patterns. So think about the market like the hills of Tuscany. So in this case, it doesn't mean that the market needs to peak. It doesn't mean that at all. It's just evidence of indecision in a day. You see dojis all across markets and trending markets. Something to monitor. Just a big nothing burger on FOMC day. Handsome dude. Also, Michael Naus, leading the league in technicians with beards. By the way. Can I talk about my favorite chart now?
Yeah, sorry.
Sure.
Or I can ask you about my favorite chart, Strazza.
I have nothing to add. That's excellent.
Do you know which one? Do you know which one it is? Which one do you guys think is my favorite chart?
Well, it might be the same as mine, actually.
Frank Capillari.
Oh no, it's not.
Frank Capillari. Nerd alert. JC likes the bond chart.
Shout out though to our new intern, Evan. Evan making the list here. All right.
Evan made the chart report list today.
Yeah, his chart.
Shout out, Evan.
Look at that.
How about that, huh?
Talk to me about
what do you think about this? Fed funds leading 10-year yield. So is this the answer to the question that I ask every freaking day of my life?
Seen this chart a lot. What I would say is that the 10-year led to the downside in 1920, right? And the effective Fed funds rate played catch up to it. Is the market
You're talking about 1920?
No. Yeah, 1920. Like 2019, 2020. 1920.
Oh, sorry. I'm like, what the fuck are you talking about?
Yeah, no, right here in the middle of the chart. So basically what I'm saying is the federal funds rate is showing you what the Fed is doing. The 10-year, the red line, is showing you what the bond market thinks the Fed is going to have to do. So I would believe the red line.
You would believe the red line. Yeah. Interesting.
If you zoomed in on this, you would see a nice little divergence where 10's looking like it's, the bias is sideways lower and Fed funds keep rising. ECB.
So this is what this. So you agree with the red line and technology stocks essentially?
Yeah, I do. Listen, the ECB hiked this morning, another 25 basis points. These central banks are not ready to stop. And it's ordinary to see the U.S. kind of pivot first, right? They'll typically start cutting first, start hiking first, right? And then Europe will follow. But still, developed countries overseas are still hiking rates. Market is telling us, with good degree of certainty at this point, and the trend is up. The market's telling us that we're going to go another 25 next month. So
U.S. is not ready to stop either. They said so.
What is the what's the percentage probabilities of next month hike? 25%?
High.
60?
It was about 60. Fonz could check quick and let us know.
Yeah, I could also check here. Let's see what we got.
I had some stuff to talk about here.
Wait, I had one more thing on this the chart report. I wanted to highlight this guy, which I thought was fun. Let me zoom out.
This is
Maybe
not a chart. What am I looking at? Is this an SEC filing?
it's a data table. It's a data
Wow,
table.
hating on his data. I mean, listen, Strazza, we put out very pretty tables with different colors, and not everybody has the crew that we have. You don't just have to hate on his lack of prettiness. Like, it could very well be nice data.
This gives me audit room PTSD.
I'm sorry, but this is interesting, okay? Because this is coming at it from the bear's point of view, right? Which I find more interesting than rather than just reiterate, oh, stock's going up, bull market. No, if you think we're in a bear market, you're entitled to your opinion, but know that if this is a bear market rally, it's like the mother of all bear market rallies, right?
Guess what? Back in August of last year, same narrative. We've never had a bull market rally that went whatever it was and retraced the full 38%. Remember that, JC? And then went on to make a new low, and it did. And all these stats were going around last year. This would be the first time ever, the ultimate low has to be in. Nope, the indexes all went on to make incremental lows again, just to prove everybody wrong.
Stop disagreeing.
Here's how I look at it. Listen, here's how I look at it.
Happened last year.
Here's how I look at it. Over the last year, have the majority of stocks been going up or have the majority of stocks been going down? The answer is that over the last year, the majority of stocks have been going up. You can call out whatever you want. The real question is, what happens next? Does the underlying trend continue? Like historically, trends do continue. Asset prices trend. We know that. We have the data. Or do all of a sudden tomorrow or today, we just completely reverse and stocks all start falling at the same time? That's the bigger question. It's not whether it's a bear market rally, it's a bull market, secular bull, cyclical bear, blah, blah, blah. It doesn't matter. Have the majority of stocks been going up over the last 12 months? Yes or no? The answer is yes. So the question is, do all of a sudden, completely out of nowhere, with no evidence or breadth deterioration at all, does everything immediately starts to collapse today? That's entirely possible. And that could be the bet that you can make if you'd like. I'm not seeing evidence that that's what we want to be doing at all. Quite the opposite. We continue to find opportunities in stocks from the long side.
Yeah.
We're looking to buy this breakout in Lennar. I mean, I'm letting this thing dance, but I got my eye on this, man.
Hey,
look at it, 118.30. It's hanging in there. Okay. 13 minutes after the open, so I'll let it dance. You know how I feel about incomplete candlesticks. I do not like them.
I just did about 30 seconds of due diligence on this Portnoy DHC, Diversified Healthcare Trust. There's a boardroom issue, shareholder fight going on right now. So an investor in Diversified Healthcare Trust, which is the company that we continue to see the insider buying in from their chairman and CEO, Portnoy, another investor expressed concerns about the accumulation of the real estate investment trust shares by the CEO of the company, who also manages the firm. Flat-Footed is apparently the name of this institution, holds about a 9.7% stake in DHC. They called on the company's board to assess whether it is appropriate for Portnoy to continue buying shares. Portnoy leads RMR Group, which manages both DHC and Office Properties Income Trust, which is OPI. He's trying to merge the two. He's trying to combine the two companies, but the largest shareholders are pushing back. So he's trying to.
I like the strategy here. So they're complaining that you're buying too many shares, and your response is to buy more shares. I mean, that I appreciate. I like that.
Yeah, so it looks like it's
a nice middle finger right back at you. Oh, you don't like it? Wait till I buy more.
D.E. Shaw is also in the name, and it seems like there's going to be a little fight here about whether or not this merger goes through. So that's what you're probably seeing be repriced into the stock.
Sounds like a bunch of rich guy beef.
Yeah.
All right. And the other thing too is, there's a couple of little like red flags here. This is a nursing home operator. So yeah,
Hilarious.
Why is that whatever? Okay. The chart report is a free daily note compiling the best charts and the occasional old school printer table from around the world of finance. Use the QR code on the screen or the link in the description to get the chart report today. It is 9:45. We're running actually mostly on schedule.
I like this snow trade Kimmy just put on.
Yep, Kimmy just entered and is actually out now. Oh, she's out of snow. That was fast. It's time for Option Sean. He's here. He's ready. let's do some options with Sean McLaughlin from All Star Charts. If I can find my intro.
Shawnee baby.
What's up, boys? Thanks for the lunch recommendation. I got a kava here in Boulder. I'm going to go check that out.
Do you?
See,
Everybody's eating this but me.
we got a big team. We could do some serious boots on the ground research between you and
Hey, I love me some falafel, so let's. I'm in.
I'm actually looking forward. I heard that Wendy's has a strawberry, what's the chocolate frosty they used to have? They have a strawberry version now.
strawberry frosty.
It's been around for a while.
I'll let you and your daughter handle that channel check.
I love me a good milkshake. Really do. All right.
Yours bring the boys to the yard?
All right, hold on. So, okay, Sean, I'm going to tee up nicely here. It's not time for recess, boys. Today, European Central Bank, ECB, raised their benchmark yield by another 25 basis points, puts it at 3.75. They also put out their growth projections for the euro area. Basically, what they're telling us is that the Eurozone is going into recession. Can somebody tell HSBC?
HSBC doesn't care.
I was wondering where you were going with this. I'm like, you understand that Sean does not care about European 10-year yields. Sean doesn't care about American 10-year yields.
He cares about European banks.
I was wondering where you were going with this. Okay, HSBC, I love this trade. How are these calls so cheap, dude?
I'm not in it yet. I got to get into that.
I'm not in it yet either. I wanted to see it dance yesterday.
Strazza and I talked about this yesterday. To answer your question, why are these so cheap? And I think this is just my guess, but the word bank right now for what is still scary to people, right? Banks, with everything going on in the regionals, everyone is kind of like hands off. And look, I've been kind of hands off on banks as well for all those reasons. That being said, the money center banks, like the JP Morgans of the world, that are benefiting from the deposit flight from all these regional banks. HSBC is one of the JP Morgans of the international banking, right? I mean, there's deposit flight happening internationally as well, and HSBC is most likely benefiting from that very well, much like JP Morgan is here. And my thinking is, JC, is that right now people are afraid of banks. Banks are a four-letter word, right? And so they're not looking at bank charts. But once the fear goes away and people start waking up, okay, it's time to wade into these banks, they're going to start cycling through charts, and people are going to start noticing this HSBC chart.
Hold on, we're buying the January 40s?
We bought the January 40s. Yeah, we paid $2 for them yesterday, JC.
You paid $2. I'm going to get it for $1.95.
Yeah, it seems like a steal to me. I mean, this thing, we have 6 months, a little bit more for this thing to break above, let's say, $42. I mean, I don't know. You got to love this chart.
I like the upside. I really like how cheap. It really, really is, which is super surprising. When you told me that we can get these things for a couple of bucks, that's crazy.
Hey, I was just as surprised as you were. That's why I was like, whoa. It's like the trade jumped off the page at me.
Okay, so what about some short-term risk management? Since we're buying the calls, the most we could lose is what we buy. Great, is what we paid for it. At this point, $2, can't lose more than $2. Not terrible. But what about additional risk management?
So I'm leaning against the 36 level. The little, if you look over the last, let's call it 4 weeks of trading action, kind of had a little bit of sideways chop that we're finally breaking out of now. But the low end of that sideways chop is about 36.50. I mean, actually, I could probably use 36.50 as the risk management level. That would probably be a better level.
I think it's okay. Let it dance a little bit. Give it 36.
Yeah, 36.50. That's the zone we want that area to hold. If we lose that area, then I don't like the trade, at least in the short term.
Yeah, I think you nailed it right on the head too, Sean. Like, it's the reason the premium's so cheap is it's a bank, European bank.
Yeah, it's got all the things that people are scared of right now baked into the cake, but man, HSBC is just executing on their business, and they're benefiting from capital flight, and You know, not all banks are terrible,
Hey,
even though we want to think they are.
Speaking of which, have you guys seen? I played this with Sean yesterday. JC, have you pulled up the Credit Suisse chart lately?
I have not. What's it doing?
It's a copper stock now.
Stop it. No, it's not.
On the TSX, CS.
Oh,
is,
got it. So
yeah.
it's got it. So it's cs.to or something.
It's gone. Poof.
That's funny.
It's gone poof.
Should we talk about the meats indicator, guys?
The meats.
Meats
What is
indicator.
meats?
So we have, we could do this now, Spencer, right? Do we have anything else that we're supposed to talk about?
Go for it.
So
I saw this in here and I was very confused, by the way. So
throughout history, there have been some really, really kind of funky recession indicators, whether it's the underwear indicator, the hemline indicator for girls' dresses, right? It's all these weird things. The Costco CFO thinks he's on to a new one, which is basically that during recessions, right, or periods where the economy is weak and consumers are under pressure, they buy less beef and more pork and poultry. So chicken and pork are cheaper. Steak is more expensive. Less steak, more chicken. And he made comments about this on the earnings call. He said, Costco shoppers are reining back on pricier products, and it's a good indicator that they're prepping for a recession. Sorry, that's the article. CFO Richard Galanti said some of its customers are ditching pricier beef products for cheaper meats, such as pork and chicken. This is a trend that has been common in previous recessions, he said.
Oh, man. Well, my family must be part of the problem. My wife literally just yesterday bought some pork ribs at Costco.
We had pork yesterday. Delicious. I ran basically I went out, I took live cattle prices, which is basically cattle ready for slaughter. So that's beef prices effectively. And then we took lean hogs, which is pork prices. We're looking at the beef versus pork ratio here. There's no alpha here. I'm not agreeing with CFO Richard Galanti on this one. I don't see much of a good recession indicator, but I thought it was a fun exercise. So this is the beef versus pork ratio. Jason.
Hey, where else can you find the beef versus pork ratio than right here on the morning show?
Listen, if you're not looking at the beef pork ratio, how are you even taking your portfolio seriously?
Yep. Well,
we are. That was a good time to mute JC.
We have
there.
the meats.
The Arby's indicator.
Dude, we had a vegan here yesterday who was offended at our talk about langoustines. I'm like, dude, we eat a lot of meat here. Sean eats less meat, but me, Strazza, and Spencer Israel, team protein, animal protein.
No sweet greens for me.
They get in the way. The spinach gets in the way of the steak, you know?
Wait, Sean, you with us? I think, hold on. Sean, I think Sean's headphones died. Actually, is I think what just happened.
Yo, let's go. Recess. Hit it.
Oh, wait, hold on. Let me work with Sean here because he's saying thumbs up if you can hear me, Sean.
Have we
That's
talked
all right.
about everything we wanted to talk about? And what caused that move in Nike yesterday? That was just this China sales news?
I'm in the HSBC. I'm in. Let's go.
UBS put out a note?
Yeah, it was. Well, the entire sector was up yesterday, the entire industry group, but
It's up a lot.
yeah, it was the analyst note.
UBS. All right.
Sean, can you hear me? No. Okay, he'll be like, speaking of analysts, we got a downgrade on SoFi today, right?
Yes.
Right.
And the stock's moving too.
Oh yeah.
I mean, look, when you're going to rally that way, you're going to correct through price.
Yep. All right. Sean's back.
Sean, baby.
Sean, you back?
I'm back. I can hear you guys. All of a sudden, your audio went dead.
You know what? This is a gift for SoFi. Really, like a nice little retest of these August and year-to-date highs around 8.25 would be nice because this thing ran all the way to $10 as soon as it broke out. Didn't really give people much of a chance to get in. So maybe you get a little textbook retest here. Gives buyers another shot and another really good entry. Well,
you guys like the snow or what?
Snowflake,
Kimmy traded it quickly, but I think that there's more here. No.
the base.
I like it above 185 for a swing trade.
Yeah, 185
Yeah.
level.
No, it's not for me. It's not for me. It's probably going higher, but it's going higher without me.
Not the cleanest.
JC, the vegan is still here, by the way. Jonathan's in the chat. He says, I'm still here, and I'm still vegan.
Well, welcome. I love vegans. I got no beef with vegans. In fact, when I go to India,
Vegan has no beef with you.
Keep that one right up. Keep that one right
No,
up.
when I go to India, I don't eat any meat, and I eat freaking awesome, man. Man, do I eat good in Mumbai. You guys are gonna have a good. Sean knows. I've been to Mumbai with Sean.
Oh yeah, we ate great in Mumbai.
Yeah, dude.
All right, let's do some recess.
All right, Strazza, what do you got?
Is anybody else getting some serious Q2 2020 vibes from this market?
Can't say that I am. No.
Some June 2020 vibes?
No, I think you got your recency bias mostly.
I don't know. Let's talk about it. So in Q2 of 2020, we had every breath thrust in the world fire after one of the most aggressive sell-offs in the history of the stock market during the COVID crash, right? So we fired right back, and then all of a sudden we had a market of investors saying, "Wow, maybe this is a new bull market." Right? People started coming around to accepting that idea. We had a really nice expansion of participation like we have over the past 3-4 weeks. Stocks looked great. They got a little bit ahead of themselves. You could see like a little blow off peak in June of 2020, and then a really hard correction just to keep everybody sufficiently uncertain about whether or not it really was a new bull market. And when I look at where some of these, RSI 14s are, momentum is hot, we got some of these dojis forming. I don't know how much longer it lasts, and I wouldn't be surprised if we do get some pretty sharp corrective action in the coming weeks.
Strazza's calling for a sharp correction in the broader indices? Uh-oh.
I didn't see that coming.
Just dragging higher, just lazy uptrend, like we're talking about no down days, like every single day we're just, just dripping higher. I don't think that lasts. We're going to get some volatility here.
Yes, but would you say we've reached exuberance? I don't know when that point is. I think it.
Would you say that we're going to stop seeing some stocks going up? Or are you saying that it's going to be harder to find those for a temporary period of time?
No, I'm saying mostly like at the index level, you might see a sharp correction here, and it'll probably be driven by some real corrections in the leaders, which we really haven't had all year.
I think that people don't drink enough Amarone.
Is that the red one? Oh,
Amarone della Valpolicella. For those of you who are into knowing exactly what this is, Amarone. It's not the cheapest Italian wine. It's Italy. In my opinion, your money goes the furthest in Italy when it comes to wine. Of all the countries in the world, and what I mean is you're going to get good value for your money. Not that you're not going to get good value in a place like France. You're just going to pay a lot more for that value than you are in something like Italy.
Italy has
Amarone is one.
I agree
With that,
Italy has all the best things. I agree.
they do not have all of the best things. To be clear, your money goes the furthest, in my opinion, in the wine world in Italy. Amarone is a major exception to that. It's not cheap, but get your hands on some 10-year-old Amarone, and drink it with something. In my opinion, is what you drink with something spicier. Like the Fra d'Avola or whatever. What is that?
Fra Diavolo. Yes.
Yeah. Drink Amarone with that. It'll get you done.
Hey, Spencer, I enjoyed at the top of the show, you were asking the audience where everybody's tuning in from. That was great to see the wide variety of people tuning in. I want to give a shout out, forget the guy's name, but I want to give a shout out to the guy in Singapore, because Strazza and I are booking flights to Singapore. We're going to be out there early July. Maybe we can hang.
Let's hang out.
Strazza, please don't get arrested in Singapore, bro.
Chris, I don't know why all you guys say that to me. I'm the responsible one on this trip. I'll be making.
No, Sean is the responsible one. You and Giancarlo get together is trouble.
Why do you think I made sure that Sean was accompanying me on this trip?
Sean's the babysitter.
I'm going to be the babysitter for sure.
We're counting on you, Sean. Bring them back safe.
Can I speak to recess before we go, please?
Yeah.
U.S. Open starts today. This is now like the first time since the Live PGA News that these players are getting together. And this, to me, is where it gets weird, right? Because, like, this morning, for example, we got Rory McIlroy playing with Brooks Koepka. One of them took the couple $100 million. The other one didn't take the couple $100 million. Now they're both in the same exact position, and they're supposed to, be buddies today out there on the golf course. I just don't think you're going to see that. There's going to be a divide in this sport for a very long time now because of this.
A rift in the golf world. How do we cope?
Since Steve mentioned the beef pork indicator from Costco, I was reminded of a book I want to recommend. You can either buy this book or there's a podcast about it. It's called Retail Revolutionary and Social Innovator. This book was written by his grandson or his son. Yeah. This is the guy that invented
Solana. He created Solana. I know this guy. Yeah.
Yes, funny. He invented the warehouse retail model. This guy mentored the founder of Costco. And the founder of Costco, basically credited this guy, Saul Price, with everything, right? All of his success. This guy, the precursor of Sam's Club, precursor of Costco. He invented the whole model, basically. And it's a really good book. If you don't want to buy the book, there's a podcast about it on the Founders Podcast, which I recommend. So check it out if you are interested in such things. This guy was he had a very interesting life. I'll put it that way. And, Thought that was cool. Okay, that's my recess. Any other recess, Sean?
It's a bull market.
And why is it a bull market, Sean?
You heard it here first.
Going up every quarter?
Because they're buying the beef. Throw up the live cattle chart. New all-time highs for beef.
Protein program, Perlman program.
Well, look, not to talk Fed, but I'm really liking the way the market has responded since the Fed announcement yesterday. I feel
you read those minutes, didn't you? You read them.
Oh yeah, I read them. But I just feel like people were expecting the market to sell off yesterday, and as we know, the market likes to fool the most people, and that seems to be what's happening right now.
Shopify is about to go, and we're getting money by tomorrow.
Let's go, bring it. We're long.
All right, guys.
All right, that's our show for the day. Thanks to our guest, Ed Clissold. Thanks to Kimmy Sokoloff. Thanks to Sean McLaughlin. If you're watching us on YouTube, thank you for the comments in the chat. If you want to hit that thumbs up button, hit that like. We'd appreciate that. If you're watching on Twitter, maybe head over to YouTube and hit thumbs up there as well. That does help us in the eyes of the algorithm. Let's see, more coming up today on Stock Market TV. We have Chart Request Live, CRL at 1 o'clock. We already have questions for the show today. Somebody is already in the chat. I saw him this morning. So 1 o'clock right here, Stock Market TV for CRL. Stay tuned for that. And that's a wrap on the morning show. Everyone have a great rest of your day. Good luck out there. And if you're at the beach, have fun at the beach.
Hell yeah, let's go.
A certain person who shall not be named is at the beach, and we are all jealous. I don't know where my outro is.
Did you bring the keyboard?
Izzy, I think Izzy deleted it. I don't know where he did.
Oh man,
my outro is gone.
Special edition episode tomorrow. We're celebrating something really special. So.
Oh yeah,
nice tease there. Nice tease, Strazza.
All right, I like it. All right, guys, I'm going to the beach. Adios. I already did my hedging trades for the day.
I'm just gonna run this. See you guys.
Later.